I'm bringing a lot of series for economics mains answer writing program. And as you can see that the mains program or mains answer writing or a mains, even the mains out there for the UPSC examination is a closer by date. Again, I'm going to bring a lot of stuff out there. Do check out for that. In today's session, we are going to discuss the taxation system out there. We're going to discuss the taxation system. And you can see that it's a repetitive theme that's been asked by the UPSC over and over again. It's a favorite theme out there. Again, taxation forms the base of economy out there. Taxation forms the base of economy out there. We're going to discuss certain topics out there. We're going to discuss certain topics that's very relevant when it comes to mains answer writing program. Even you could use these stuff out there and across 4 GS papers if you want to use for that as well. If you want to use for that as well. So let's begin our session, because in this session we are going to discuss about the intricacies, deep in dive about what's going on in taxation system out there. What's going on in taxation system out there. So let's begin this. So let's begin this out. Let's begin this out. So as you can see, what are the challenges that's been facing in the taxation system out there? What are the kind of challenges that India is facing when it comes to taxation system out there? You could see that India's tax to GDP is still very less out there. It's still very less out there. See for this example. Tax to GDP is just 11%. But when you compare this tax to GDP with other OECD or developed nations out there, it's a 34% out there. So India's tax to GDP is relatively less when it compared with the other developed nations out there. What's a tax to GDP ratio? What's a tax to GDP ratio? Now that's a concept out there that you should know about that. That's a concept out there that you should know. So it represents this tax to GDP ratio. Tax to GDP ratio. This means it is the tax that's been collected, over GDP. So that has been less. That has been, of course, very less. That's been extremely less out there. What are the reasons that it could be less? Again, so one is, again, if you see certain reasons out there, if you see certain reasons out there, sir, one is tax evasion. One is tax evasion. Another is almost 80% of population is employed in unorganized sector. Is unorganized. 80% of workforce employed in an unorganized sector is organized in unorganized sector out there. Unorganized sector out there. That means people are not paying direct taxes. TDS, that is a tax deducted at source. They are not paying that. TDS has not been there. Tax evasion is another thing. Again, there has been a lot of loopholes in Income Tax Act and been carried out by CAs, chartered accountants out there. You reduce your profit out there, you will pay less tax. That's as simple as it can be. As simple as it can be. It's revolving around approx 11%. Revolving around approx 11%, where direct tax contribution is 5.5%, whereas the rest point, I think it's closer to 6%. Take this as 6% for a whole natural number, and indirect tax contribution is approx 5%. Approx 5%. Now, sir, we want the tax to GDP ratio, whatever the tax is collected by the government, it should come majorly from direct taxation. Not from indirect taxation out there. What's the reason behind that? Sir, indirect taxation is regressive in nature. Indirect tax regressive in nature. Indirect tax is regressive in nature. How it's regressive in nature, sir? Take an example of a bread out there. Take an example of regressive means it's not progressive out there in the society. It's not as progressive out there in the society. Take an example of a bread out there, or compare two classes out there. One is rich, one is earning 1,000 rupees as an income. Hypothetically, one is earning 1,000 rupees as an income. 1,000 rupees as an income. Another person is earning 100 rupees as an income. Another person is earning 100 rupees as an income. Now the point is very simple out there. The point is very simple out there. Say both have gone to the market to purchase a piece of bread or packet of a bread out there. To purchase a packet of bread out there. Bread out there. Again, the tax, indirect tax, it's applicable all over the world. It's applicable on all products out there. You have to pay GST out there. So you will pay what we call SIT tax. You're paying indirect tax of rupees 1. Indirect tax of rupees 1. 1. No, he's paying 1 rupee over 1,000. He is paying 1 rupee over 1,000. Over 1,000. On percentage terms, it is 0.1%. On percentage term, it is 0.1% out. On 100 rupees, it's paying 1. He's also paying 1. Though he's not coming from an affluent family, he's coming from an affluent family. He's coming from a working class family. You need to assume that 1 upon 100 into 100. That is 1%. Now look at thing. He's also paying 1 rupee as a tax. This person is also paying 1 rupee as a tax, but the percentage of his income, he is paying only 0.1%. He is paying only 0.1%, whereas this person is paying 1% of his income, 1% of his income on tax. That's why it's called a regressive, because it's not pro poor, not pro poor. It's pro rich. It's pro rich person. So it is, when you talk about the GST out there, when you talk about any indirect tax out there, it's a pro rich person. It's a pro rich. It favors rich person as compared to any other middle class person or any other person who is coming from a working class family, coming out of from working class family. I hope you got this. Why indirect tax is regressive in nature, and why tax to GDP ratio should be majorly dominated by the direct taxation out there, because direct taxation is an equalizer out there. Direct taxation is an equalizer. Direct taxation is an equalizer over there. Equalizer. Because again, who's gonna pay more TDS? A person who is earning more. Who's gonna pay more TDS? A person who is earning more. Who's gonna pay TDS? Tax deducted at source. That whenever you receive a salary slip out there, a certain part of your income is deducted because it has to be paid as a taxes out there. So TDS, it's being paid by those who are earning more, who are earning more, who are earning more. So it's a great equalizer out there. It's a great leveler out there. Always, it's better whenever the government collect taxes out there. It should be direct taxation. Should be more in comparison to indirect taxation. In comparison to indirect taxation. In comparison to indirect taxation. In comparison to indirect taxation out there. I hope you got this concept. I hope you got this concept. So again, when I come to tax to GDP ratio, it's 11% out there in the economy as compared to the OECD nations where it is 34%. Where it is 34%. You can see why there has been a less taxation out there. Why the government, again, because now a lot of people criticize Sitaraman out there, Tai, for doing all sort of those nonsense stuff out there by imposing GST on everything out there. Even there was a out and out backlash over that GST imposition over caramel popcorn. That's 28%. But sir, trust me, the government is not getting anything out of that, because the rich people know how to evade tax, how to evade tax. They are not getting any sort of taxation benefits or tax revenue from the rich people out there. As a result, they are imposing too much heavy taxation on indirect taxation, but including all that stuff in the GST out there, which imposing ultimate burden on the middle class and the person coming from the working class. Middle class and the working person coming from the middle class. That's why you have seen a lot of backlash or outrage out there in the social media against the finance minister called Sitaram. Nirmala Sitaram. I hope you got these points out. I hope you got these points out there. That's how things work right now. Now, this representation addresses systematic issues like regressively evasion, compliance burden, all these stuff. Let me tell you one another thing. There has been earlier it was the case that there has been a lot of burden by the IRS officers. They were corrupt out there, put a lot of what we call the tax terrorism on people. Even if you know that CCD owner Siddhartha, I think there was Coffee Cafe Day owner, he committed suicide, and the reason for the suicide was that a lot of taxation officers were harassing them. That's called a tax terrorism. That's called a tax terrorism. So again, there has been a misalignment or something is not going on within the system, be it from the payer side and be it from the receiver side out there. So term is called a tax terrorism. Tax terrorism. Okay. Tax terrorism. I hope you got these points out there. I hope you got these points out there. Okay, let's move on to the next thing. The burden of a regressive taxation. As I said, indirect taxation is regressive in nature. Indirect taxation is regressive in nature, but don't worry about this. So it's 11%, not 17%. Okay, tax to GDP is OECD average 34. Indirect taxation is always regressive in nature. It's gonna extract maximum. It's gonna extract maximum from the people that's coming from the lower middle class and from a working class family out there. I hope you got these points. I hope you got these points out there. Okay. I hope you got these points out there. Let's move on. GST bottleneck in India's landmark system. See, when you talk about the GST out there, there's a lot of things that you need to know. Again, how it works, input tax credit system, XYZ out there. But sir, it's a topic that you need to know that it's been creating a bottleneck. It's been a problem for India for a long period of time because again, it's an indirect taxation out there, and it's extracting maximum revenue from middle class and lower middle class families. Now, sir, GST, when it was introduced in 2017, it created a havoc. It created absolute havoc within those that's been working in a MSME, micro, small, medium enterprise, unorganized sector, because the burden was such. The change was sudden. They couldn't understand how to comply with this, and even exporters and importers faced a lot of problems because input tax credit takes time. It takes time to receive amount. It takes time to, to give away your balance out, the remaining balance out there. And again, when you're exporter and importer, you don't have that much of time. You need to deal with the cash. You need to deal immediate out there. That's how it creates. That's how it created a lot of havoc at that moment of time. I hope you got this. Let's read this. It's a 2017 out there. Major finance reform. Major finance reform. Major finance reform on to unify 17 plus indirect taxes, a lot of like entertainment tax, excise duty tax, value added tax. So GST included a lot of taxes, a lot of indirect taxes. Like to some extent, what are the examples? Don't need to remember this because it's not been in the news at this moment and will not be asked to some extent. GST, like excise duty, excise duty. Earlier it was indirect tax out there. Uh, Value added VAT, value added tax. Another is central sales tax. Central sales tax. So all these stuff were amalgamated, were juxtaposed or imbibed, amalgamated. Is a better word. Amalgamated in GST out there. In GST out there. I hope you got these points. I hope it's clear. Coming back to the PPT. Technical glitches were majorly there. GST and portal. Still, we called ourselves as a digitalized nation out there. Digital India has been on a rampant for India. But there has been a lot of tech glitches right now. At this moment, even we face a lot of glitches out there when it comes to GST and portal. When it comes to GST and portal. GST import. Cost 15% filing delays in quarter 3 of 23, while MSME struggled with complex compliance requirement, including multiple returns and reconciliation. Understand this, sir, when we talk about the MSME out there, Paramjeet, please increase voice level. Hello, hello, hello. I hope it's clear now. I hope it's clear. I hope it's clear. Hello, hello, hello. Okay. So when we talk about the GST out there, when we talk about the GST, sir, understand this. Compliance mechanism is very tough for MSME people, for the person working in an unorganized sector. How he will handle all these online stuff out there? That's a tough job for them. That's a tough job for them. It requires a professional help out there. It requires a professional help of what we call as for CAs and CFAs, all these stuff out there. That's how thing works. But again, it's a very complex procedure for the people coming from a middle class, lower middle class, or doing all these stuff of MSME sector. That's a difference. That's a difference. First is GSTN portal doesn't work. There has been a tech glitches over and above again. Another is input tax credit. The amount it release, it takes time. It doesn't suit those who are doing import or export business because they need cash at full front, at immediate price, at immediate point out there. Otherwise, they will bear a certain amount of loss, which no one wants to bear that, which no one wants to bear that. Okay. Take an example, input tax credit. Fraud is rampant with over 1 lakh crore is fraudulent claims detected. Multiple tax slab. There has been a multiple tax slabs. 0%, 5, 12, 18, 28% also lead to classification dispute. You must have again seen the outrage that's been imposed taxation on what we call a caramel popcorn during movie. So it has again received a lot of backlash over social media. You must have seen even at certain moment of time there was taxation on eggs. For a lot of people, egg is a basic diet out there. It's very convenient out there. For example, a lot of people consume eggs during breakfast. But so if you impose certain amount of taxation on these basic stuff, it's gonna hurt which sector more? It's gonna hurt which section of society more? It's gonna hurt more middle class out there and lower middle class. As you know, that indirect taxation is regressive in nature. Is regressive in nature. I hope you got this. Again, sir, the whole problem is that the tax to GDP ratio is 11%. You're not receiving enough tax out there. That's why government and finance minister Nirmala Sitaraman is imposing too much of taxation, indirect taxation, because they want to. Again, government runs on money, and they want that. No one talks about the corruption. No one talks about why those billionaires and millionaires are not paying that sort of stuff. Because again, it's easy to manipulate accounts when you have a good CEO. It's easy to manipulate accounts when you have a good CEO. So that's how thing works. That's how thing works out there. Okay. Again, litigation problem is different. It involves cost to deal with GST. The problem is GST involves cost. GST involves cost, which is not, working class can't bear that. Involves cost. Working class can't bear that. I hope you got it. I hope you got these points. Let's move on to the next slide. So there's been a problem of what we call as a tax evasion. Tax evasion. There has been a lot of startups out there, a lot of, I would say, good startups that's doing well, really good. Zerodha is there, Zepto is there. But sir, again, the tax to GDP ratio is very less. Tax to GDP ratio is very less. Tax buoyancy is very less. What's a tax buoyancy out there? What's a tax buoyancy out there? Tax buoyancy. It represents incremental or delta. It represents change. What's change in change in taxation revenue? Change in taxation revenue divided by change in GDP. That's what tax buoyancy is. That's what tax buoyancy is. Now, what does it represent? It represents if there is a change of 1 unit out in the GDP. If there is a change of a 1 unit of GDP, 1 unit of change, or it increases with a 1 unit out there, how much revenue I'm going to receive with that? How much revenue I'm going to receive with that? That's called tax buoyancy. That's called tax buoyancy. That's called tax buoyancy. Again, sir, the tax buoyancy has been less. Tax buoyancy has been less. Tax to GDP ratio is not up to par. Tax to GDP ratio, tax to GDP ratio is lower as compared to the OECD, which has 34% out there. So again, tax buoyancy is less, tax to GDP ratio is less, even the tax base, the people that's been giving tax out there, it's not much. So the only system that remains with the government to tax more people is through indirect taxation. And that's why middle class and the working class family are facing a brunt of this, insensitive taxation system that's called an indirect taxation or GST system out there, because you can't do anything out of that. Government wants revenue, where it is getting from? Rich people are not paying that because they know how to manipulate their accounts through CS. It always comes from a middle class family. That's why it says that middle class trap is a vicious cycle out there. It's a vicious cycle. You, it becomes really difficult to escape that thing. It becomes a really difficult to escape that trap out there. It's a middle class trap out there. Middle class trap out there. Sir, as you know, you are living in India. It really becomes difficult to change your class. For example, if you're born in a working class, it is almost a low probability event out there to change your class out there. It almost becomes absolutely close to zero. If certain thing happens, for example, lottery system works for you, or even or you're very lucky, out there, only then things gonna work out. Otherwise, there is no chance. Otherwise, there is no chance out there. That becomes that it is that difficult to break your generational class, to break your generational class, to break your generational class out there. I hope you got these points out there. I hope you got these points. So again, estimated that 15 to 20% of GDP, the shadow economy, results in significant undeclared income, primarily in high value sectors such as real estate, gold, and unorganized sectors. What we called as black money. What we called as a black money, on which we don't pay taxes. What we called as black money, on which we don't pay taxes. We hide that, we don't pay taxes over that. And the best way to utilize your black money is a real estate thing or a gold thing. A lot of bureaucrats who are indulge in corruption out there, what they do with the black income, they possibly buy a certain real estate out there, or they invest in that gold, because no one's gonna trace that. No one's gonna trace that. Or another thing called as a Swiss bank out there, but that's not for bureaucrats out there. That's we'll study with the politician economics out there. Okay. So these are the things that you should know. That's a shadow economy. That's not a real economy out there. That's a shadow economy. Resulted 15 to 20% of GDP loss. That much amount of loss should in our economy. The widespread tax evasion leads to substantial revenue loss, hindering public spending on critical infrastructure and social programs. It also undermines tax morale and fairness, eroding trust within the formal economy. Addressing this requires robust enforcement. There is a concept called social contract theory out there. Contract theory by Montesquieu. So there's a concept called social contract theory. There's a concept called social contract theory out there. There's a concept called social contract theory out there. What did they say? So, for example, there is government. It's a contract between a government and people. It's a contract between government and people out there. So, of course, People can't run nation out there. People can't run nation out there. They have a lot of responsibilities. They have to run their houses. They have to look after their loved ones out there. A lot of responsibility for middle class. So in order to delegate responsibilities of running a nation, they delegate that to government. That, look, government, we are busy, we don't have time to run this nation, we have our own set of responsibilities. We are giving, what preamble says, that we the people of India, we are giving a certain amount of powers to you to run this nation, to run this nation, to run this nation. And it's a delegation of powers. It's a delegation of powers. It's a delegation of powers. In return, government says, don't look, we'll look after your safety. We'll look after your safety. Safety. We look after your safety, and of course running an administering country, administration. This is called a social contract theory out there. This is called a social contract theory out there of Montesquieu. Again, sir, people says, okay, we don't have time to run our nation, we're going to delegate your powers to the government out there. In return, government says, okay, from where we get all sort of funds, people say, okay, don't worry about that, we're going to pay you taxes. If people will evade taxes, especially those rich persons who has a lot of money out there, even the inequality has been too much high in the economy, as you can witness that from Lawrence curve out there. So it is, if people are evading tax, it's nothing but a breakage of trust deficit that has been there. Trust deficit has been there between government and people, and this trust deficit would not be filled in near future out there, because it's tough out there. People don't trust government out there. They're thinking, okay, yeah, a lot of people say, why government is spending too much of money on subsidies? That's irrelevant out there. Why it's not spending on infrastructure out there? Where's the money going? Is there a lot of corruption out there? Yes, there is. Is government, its politicians and bureaucrats are corrupt? Yes, there is. There is a report that they are corrupt out there. So again, people don't have too much of trust over their government. So in a result, they try to evade tax. That, again, look, we are not getting anything out of these taxes money. We are not going to pay you anything out there. We are being taxed like a UK and provided the services like Somalia. We are being taxed like a UK and provide the service like Somalia. You can see what's the condition of roads out there. What's the condition of airport out there? What's the condition of railways out there? It's pathetic. It's complete pathetic out there. It's complete pathetic. So I hope you got this concept, why has been a dent on social contract theory. Why there has been a dent on social contract theory. Dent on social contract theory. There has been a dent on social contract theory. I hope you got these points. I hope you got these points out there. Okay, let's move on to the next slide. What's safe havens? Safe haven is another thing. Safe havens is another thing out there. What's safe havens? So take an example of a company out there called XYZ. Take an example of a company called XYZ. The topic is safe havens. Safe havens. Now take an example of a company called XYZ. XYZ. It is doing a business in India. An Indian taxation system is almost deteriorated under Income Tax Act. For example, it's been registering profit. It's been registering profit of, say, for example, 10 lakh. But it will show that it has received, and company is producing some automobiles out there, some cars and all these stuff out there, certain cars and all these stuff out there, automobiles. Now it has generated a net profit of 10 lakh out there, but it will show that I have received lot of lot of components like steel and all these motor parts out there, components out there from my subsidiary company that's been located in Mauritius, from my subsidiary company, subsidiary company that's been there in the Mauritius. In the Mauritius out there. So if had, for example, obviously they are stating a lie out there. They have purchased a motor part worth 2 lakh. They would show that okay, this 2 lakh we have we have brought it from our subsidiary company in Mauritius out there. Again, tax will not be levied on this India, it will be levied on Mauritius, and tax on Mauritius is almost zero or no taxation out there because it wants to attract FDI, foreign direct investment out there. Now there's another thing. It has registered profit of 10 lakh, but it would say that okay, I have registered profit of 8 lakh due to some accounting methods out there. Or another thing is there. It will say okay, we have not registered a profit out there. A subsidiary company has registered a profit out there. Three cases. Three cases. The first would be to reduce profit. Second would be saying that okay, profit is earned by our subsidiary company. Profit is earned by subsidiary company. Earned by Profit earned by subsidiary company. What else? What else? Another would be that okay, we have bought our parts being imported, parts being parts being imported from parts being of course imported from subsidiary company out there, from subsidiary company out there. These are the three aspects. And when I talk about the tax safe haven is nothing but the countries where the taxation is very less, and companies try to evade tax by being showing that the business is being carried out in that nation, by showing that the business is being carried out in that nation. Example can be Mauritius or Maldives out there. These are the countries that's been considered, or another New Zealand out there. These are considered to be a tax havens out there. They are considered to be a tax haven nations out there. To address this problem, a lot of countries come together and form a solution out there, that's called global corporate minimum tax. That's called global corporate minimum tax out there. Global corporate minimum tax. Global corporate minimum tax. Okay. Global corporate minimum tax out there. What's the global corporate minimum tax out there? What's a global? So, for example, a lot of countries were not satisfied with this tax evasion and a tax havens system out there. So they come together and form a solution out there that okay, let's form an opinion. If there is a company called XYZ and it's a US based company, XYZ company, and it's a US based company. Now again, assume that corporate income tax CIT, that's corporate income tax in US is 20%. Corporate income tax is nothing but 20% out there in US. It's 20% out there in US out there. 20% out there in US. Now, of course, in order to evade that high taxation system, shifted its operations to Mauritius. Operations shifted its operations to Mauritius. Now, of course, in Mauritius, the corporate income tax is 5% out there, only 5%. So US government knows that the government are evading taxes by shifting their operation and shifting their accounting practices to what we call as a tax haven nation. Tax haven nation. What we call as a tax haven nation. Tax haven nation. Now, in order to address this problem, what these countries come out with a solution? Okay, there will be a global corporate minimum tax that would be approx 15%. That would be approx 15%. Say, for example, if US companies pays subsidiary pays 5% in the Mauritius, rest 15% will be paid to US government out there by this company. Will be paid to US government. Will be paid to US company. That's how thing works. Because US don't want to bear that loss of revenue out there. No other country wants to bear that loss out there. So in order to address this problem, this concept of global corporate minimum tax has come out by the, of course, by the delegation of various countries out there. They discuss what's need to be done and they come out with this solution out there. They come out with this solution that, okay, pay whatever there is, pay the rest difference to our nation. Pay whatever you want to pay at tax haven nations, and the difference between 15% out there, you need to minimum that you percent you need to pay to your host country, to pay your host country out there. You need to pay that to your host country out there. Host country out there. I hope you got these points. I hope you're clear with these points out there. I hope you're clear with the points out there. Let's move on to the slides. As you have seen that safe havens has been offshore wealth. A lot of people over INR 30,000 crore of Indian wealth was held in Swiss banks. It's nothing but to avoid tax or evade tax. That's why Swiss bank has been created. And again, Swiss bank doesn't offer you rate of interest. It charges money from you to keep that amount in Swiss bank. To keep that amount in Swiss bank. Not everyone can, of course, create account in a Swiss bank. It requires a lot of money out there. Okay, so it's a method to avoid tax. Method to avoid tax. Illicit financial flows facilitates tax evasion, money laundering, illegal activities, all these stuff. That illegal activities has been taken, or you park your money in real estate and gold out there. All these exposed networks, Panama paper, and Paradism papers are revealed extensive global network. Panama papers were nothing but these papers reveal extensive black money that's been circulated in the world economy. That's been circulated in the world economy. Black money that's been circulated in the world economy out there. So I hope you got this. I hope you got this. But again, what government needs to do is it's to increase tax base out there. What government needs to do is need to increase its tax base. Bring more people under this tax bracket. Bring more people under these tax bracket. Bring more people. Hello, Ashish Kumar. I hope everything is good. Bring more people under the tax system out there, because that's the one of the ways to increase your tax revenue. Your tax base is very limited out there. Those who are working as a white collar workers who are doing salaried jobs, or again those who are multi-billionaires out there in the form of corporate income tax. But tax base is very less out there. You need to increase that. In order to increase your tax revenue. In order to increase your tax revenue out there. If you're going to increase indirect taxation in the form of GST, it's a regressive in nature, because it's going to put a lot of burden. It's going to put a lot of burden on middle class and on a working class out there. And it will receive a lot of backlash on social media, as it's going with the Nirmala Sitharaman out there. So I hope you got this. What's the concept of safe haven? What's the concept of global corporate minimum tax out there? How government come out with a solution to avoid this tax evasion that's been carried out by all these multinational corporations in and off the day. Okay, let's go on to the next slide. That's a system called Global Corporate Minimum Tax, a new landscape. OECD G20 of course come up with this 15% global minimum corporate tax system, minimum taxation system, because again a lot of companies was putting the business in tax haven nations like Mauritius or Maldives out there, where the corporate income tax was very less. Companies were bearing, again the countries were bearing loss. For example, if a US company is there, XYZ, and it set up its operation out there, and it set up its operation out there, set up its operation out there, where in terms nothing but in, for example, Maldives out there. Point is that US will not bond this. US says, okay, yeah, you're a mine company, you're operating in US, but you're paying taxes just to make sure that you avoid these taxes. You're just paying a little bit of taxes out there in Maldives out there. In Maldives out there. That's not a point. We are bearing losses for that. As a result, global corporate minimum tax come out, which shows that minimum 15% of a tax should be minimum should be paid to the host nation, paid to the host nation out there. So that's a concept of what we call Indian polity history and such regards, sir. I hope you got this. Okay, shifted the multinational enterprises. India as a signatory supports this two pillar solution for tax transparency. India has been a signatory to that and agreed that it will follow this procedure. It will follow this procedure out there. I hope it's clear with you. I hope it's clear with you. Now, what's the way forward in taxation system? We need GST simplification. As we have discussed earlier, sir, GST has been a tedious task. The compliance mechanism is tough out there. Input tax credit takes time out there. What we need, an easier system out there. We need to eliminate bureaucracy from this middle section because they take a lot of time out there. They are inefficient as being marked by the various reports out there. Need a simplification. Again, we need a digital infrastructure. GST network is facing a lot of tech glitches out there. It's again unhealthy when it comes to ease of doing business out there. We need equitable tax base. Sir, we need to increase tax to GDP ratio out there. There is no doubt about that. But not through levying indirect tax because it's been regressive in nature. It brings too much of burden out there for middle class. You need to increase your tax to GDP ratio by increasing direct taxation, by bringing more corporates under corporate income tax out there, by getting more TDS out there. That means there for the salaried people out there. I hope you got this. Again, cooperation needs to be there. There should be avoidance of tax terrorism. As I given you example of CCD owner out there, Siddharth. He committed suicide, and the reason for the suicide for CCD, that's a cafe coffee day owner, because he was facing a lot of harassment from the tax officer or what we call as an IRS officer out there. So this needs to be solved in order to make our taxation system more efficient out there, in order to make our taxation system more efficient out there. So these are certain steps. I hope these points help you to frame certain amount of concept out there, or you will use these points in your answer writing and your learning. Thanks for this. Have a nice day. If you have any doubt, you can ask upon that. There is no problem with that. Thanks. Thank you.